You know what I realized? I realized I haven't really reacted to other people's velocity banking explanations. And the reason is that I feel like at least 90% of the videos I've watched on the internet about the topic have been incredibly confusing to me. So I'm not really throwing shade, it's just the truth. And so this is why I actually created this YouTube channel because I learned about it in like 2017. And then I remember like in the early 2020s, like 2021, 2022, I was like, oh, I know this topic. And then in 2023, I decided to finally upload videos. Now, here's my issue with most of the explanations that I've seen on the internet is that they just try to say, hey, this is velocity banking XYZ, and line of credit always better than loan. And you can't explain it that way because you always want to explain, a tool or some sort of technique in a way where the person can't contradict what you're saying, right? Like they can't tell you what you don't want to hear. Okay. So, for example, if someone says, like, hey, a line of credit is always better than a loan, and someone responds, what about a 0% loan? And you're talking about using like a 15% or 30% line of credit to hack the 0% loan, like that makes no sense, right? So the way I like to ask it is not just, or talk about it is not just like, hey, velocity banking, line of credit always better than a loan, right? The way I like to say it is just asking certain simple questions like, hey, if you make really great money, and let's say you have $8,671.18 in income, and you have a lot of debt. So let's assume your total expenses is exactly the same as your income. You have $0 left over, and because you have a lot of debt, in this case, 10 credit cards and a mortgage, and on top of that, you have to pay for $2,000 of expenses, food, gas, insurance. Do you need to make more money to get out of this hole? Right. So that is a very basic question. Right. It's a very basic question, and most people will tell you the answer that you want to hear. So in this case, pretty much, I would say 100% of the people that I know, I don't think there's been an exception to this yet, but who knows, there might be in the future, have told me, oh, of course you need to make more money to get out of this hole. Of course you need to make more money to pay off the debt, right? So, one of the things that we try to emphasize when talking about velocity banking is that in situations where you have a lot of debt and with income, because we all know that, with you only get debt if you make income, right? Banks don't lend money, people will need it, but we'll talk about that later. But in those situations, restructuring our cash flow or our flow of money can make a huge difference, right? So even with the same income and the same expenses, okay, if we make something called our line of credit as our main operating account, then we could actually increase this number from zero to, let's say, over $5,000. And then, your average person will say, what are you talking about? So let's say we have, and then I just get into explanation saying, hey, let's say you have something called a line of credit, and all you did was just a simple debt transfer of, let's say, these credit cards, okay? So this is $164,000 if you sum up the 10 credit cards, and let's just do this, a debt transfer. So what happens when we transfer the debt? Doesn't the payments go to zero, right? So zero, 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 zero. And then let's say, and then as you can see here, this zero now somehow turned into $5,095.71 simply by transferring the debt. And now let's put our entire paycheck into the line, take our expenses out, and then you'll see that after every single month, the balance of the line of credit will go down by $5,095.71. And then, again, I'm kind of fast forwarding things, but you see that in 37 months that credit card debt is gone. But my point is this: I'm asking questions in a way where you almost have to use the method and there's no way out, right? Oh, of course you need to make more money. And then you see here, well, I didn't make more money, and somehow this $0 turned into 5,995, $5,095.71. So in certain circumstances, that are ideal, we can transform that money as long as we shape or change the flow of money, and we think change how we think about what we use as quote as our main operating account, right? And so when people see this go to here without making more money, that's kind of like the aha moment. At least that would be for me, right? And so that's why I don't, even if, like, let's say we kind of just erase this doesn't have a name, people can clearly see the benefits of this without having to make more money. Now, let's go ahead and watch the video on TikTok and see what this TikToker has to say. You're a retired banker. Get out of debt on a mission to help you get out of debt realistically. So let's go ahead and watch it.
I can totally explain the velocity
Yeah,
method.
and if you see right here, can you explain the velocity method? I know the rest of them, but not sure about this one.
I'm really not surprised you don't have any idea what I'm talking about, though. I don't even know why I said the velocity method. It's such a rare method used, and you'll see and understand that why in a second. And it's really
And it's rare because people don't understand it or explain it correctly, in my opinion.
technically called the velocity banking method, not necessarily the velocity like debt payment method. Without trying to completely overcomplicate it, this is only going to be a method that we can look at using if you have a home equity line of credit or a personal line of credit. I don't like using it as much if it's a personal line, but it could potentially work for some instances. And it's really where we just utilize the home equity and we start almost treating it like it's your checking account, and we pay all of our bills using it. But what it allows us to do is it allows us to kind of have the burden of your debt start to get like sucked up by the home equity, which is typically going to have a much lower interest rate than credit cards, than things that have a higher interest rate. So what it does is it allows us to kind of strategize and use a lower interest debt to help us expedite and speed up the higher interest debts like credit cards and things like that. Even that's kind of a complicated way of explaining it. Again, this is only going to be used, I only pitch this method to individuals who already have a home equity, or if I've like had a one-on-one with them and I've like really dug into their finances and I know that they could get approved for a home equity. And on top of that, I think it would be the best option for them. So it's called velocity banking. You can absolutely just Google that if you kind of want to learn more. If you have a home equity, or if you're somebody that does own a home and you think you might be able to get approved by a home equity and you want to talk about it further, slide into my DMs and we can chat about it. But that's most likely why you haven't heard about it, is you may not, one, have a home equity, own a house, or again, it's just such a like siloed down method that just not everyone could take advantage of. So
Um, yeah, that does explain it because if that were true, then a home equity loan would work. You know what I'm saying? But that's not how it works because you can't dump all your paycheck into a home equity loan. See? See, this is what I mean. Like, I guess, like, there's a lot of nuances towards this, but just the way that I would explain it is not that way about, oh, you need a home equity line of credit. It's using your line of credit as your main operating account and not paying for things just directly out of your checking account, right? And then maximizing this cash flow number. I think when people see go from zero to $5,095.71 and you haven't created more income or you haven't made more income, they can clearly see the benefits. If I see this video, I'm going to think this method is nonsense and you have to be a homeowner to use it. And it doesn't explain also the circumstances when you would be able to accumulate this much amount of debt because banks don't lend money to people who need it, and that's what this she's a retired banker, folks. Yeah, but anyways, all right. Well, again, so this is why, like, when I react to other people's velocity banking explanations, I just end up confused, right? And I probably get worse at explaining it if I watch other people's explanations. Probably it's a jab at other people, but it was unintentional. Okay, well, that's it for today, folks. Greenland to Mentorship. Have a great day, and I'll see you in the next video.